In periods of rising inflation and slow economic growth, investors often turn to the reliability of dividend stocks to see them through, and with good reason. If we look back at the performance of the S&P 500 going all the way back to 1930, you'll find that dividends account for 40% of the total return of the index over that 90-year period. Equally important, the dividend stocks in the index never had a decade where they produced a negative return. But with stock prices constantly changing and corporate profits rising and falling like the sea tides, a good dividend stock pick today could be a terrible stock pick tomorrow. That's why today we will be analyzing two dividend stocks that should remain relatively stable, allowing you to worry less about the constant need to update your portfolio. First up on the list is Antero Midstream, stock ticker AM. Antero Midstream is a midstream operator in the energy field. It owns gathering pipelines, compressor stations, and processing and fractation plants, which separate hydrocarbon mixtures from natural gas into individual products, primarily for its affiliate Antero Resources, which is an independent oil and gas company. Because it operates on long-term, fixed-fee contracts, its exposure to fluctuations in commodity prices is relatively limited. For example, its gathering and compression agreement expires in 2038, while its water handling contract expires in 2035. As a result of these long-term contracts, its operating cash flow tends to be highly stable and predictable. If we look back at the stock price over the last year or so, we can clearly see that the price hasn't moved, which is a good thing if we're relying on those long-term dividends and don't want price fluctuations of the underlying stock to impact our portfolio. In 2021, Antero Midstream did reduce its dividend payout from 31 cents per quarter to only 22.5. This reduction in payout was used to fuel additional drilling programs, which should lead to future revenue growth and additional free cash flow for the company. In doing so, Antero says the transaction should further enhance its free cash flow after dividends by over 10% through 2026. Additionally, Antero's debt load tends to be lower than many of its competitors, with a goal of achieving an even lower leveraged ratio of under 3 by the end of 2024. While leveraged debt can provide for higher overall returns when the market is doing well, a lower debt ratio will help the company weather the storm if and when the market conditions sour, leaving Antero well poised to be a long-term buy and hold stock. And for the environmentally conscious investors out there, Antero ranked number 1 among midstream companies in ESG metrics and is in the top 25% of all refining industries. Currently trading around $10.63 per share, Antero Midstream trades at a PE ratio of roughly 16 times earning and enjoys a quarterly dividend payout of 8.47%. Due to the timing of completion of its expansion projects, many analysts expect significant capital appreciation beginning in early 2024, which may make now the perfect time to stockpile shares of Antero Midstream before the price begins to jump next year. Next up on the list is industrial manufacturer Pentair plc, stock ticker PNR. Pentair does not have an exciting business model. It will not be featured as the next hot growth stock anytime soon, which is actually a good thing if we're looking for steady stock choices for decades to come. Instead, it's a slow and steady dividend stock that has created substantial shareholder wealth over the past several decades. It operated primarily as a paper manufacturer for decades until it realized it needed to diversify into other product categories. Today, Pentair is primarily a water solutions company, generating over $4.1 billion in revenue and focuses on improving the availability and quality of water. On the residential side, this includes filters and swimming pool or spa supplies, and on the commercial side offers a wide range of pumps, filters, valves, tanks, and pretty much everything else you would need for commercial and agricultural needs. Pentair has enjoyed steadily increasing dividend payouts for many decades. While you will notice what appears to be a dip in the charts in 2018, that apparent dip is the result of a stock split and not a true reduction in dividend payout. In 2022, Pentair's core sales rose 6% and segmented income rose over 12%, leading to a gross profit of over $1.3 billion. Over a slightly longer term, Pentair has enjoyed a compound annual growth rate of 8% over the last 5 years, and a terrific 14% compound annual increase in its adjusted earnings per share. Between the decade of 2008 and 2018, during the stock split and spin-off of its child corporation, nVent, Pentair grew its earnings per share by 5.5% annually. One of the reasons for this is Pentair's dedication to eliminating waste and streamlining operations into a lean, profit-generating machine. While every company strives to eliminate waste and be lean, very few are able to implement an organizational culture as dedicated to this concept as Pentair. It provides training and offers proper incentives all the way down to the operator level for those who are able to identify areas of waste. It's very rare to see frontline workers that are actively engaged and looking for ways to make a company more streamlined. And on a macro level, their system identifies acquisition targets with the highest cost savings opportunities. This dedication helped Pentair remain profitable even during the Great Recession of 2008. With a current price of around $57, Pentair trades at a forward price-to-earnings ratio of 16. While the dividend yield is on the lower side of the spectrum, clocking in at 88 cents per share or around 1.55% annually, this stock does offer more growth potential than many other dividend stock options. With an ever-increasing demand for clean, affordable water solutions, Pentair is easily a company you could hold for the long term. If you enjoyed this video, consider subscribing and leave a comment down below of what long-term stocks you plan on holding. And as always, I'll see you all again next time. Thanks.